Let's talk a little bit about the playbook for Q2 coming up here and for the balance of the year. What do you think the top play is?
Yeah, Dominic, the top play is a name, and I love names that a lot of people hate. And when you look at Tesla, that is my top name. It's been stuck in a range, and Elon Musk, the second richest man in the world, has been highly scrutinized and often ridiculed. If you go back to January of 2023, when we digested him buying Twitter, you saw the price of that stock, one of the biggest drawdowns, go down to nearly $100. Here we are at $170, a little bit up in pre, but I think it has the ability to retake its 50-day moving average at 184. And really, the way I'm looking at this and why this is my top play, I'm not looking at EV growth. I'm not looking at this as an EV company. I think this is the purest play, artificial intelligence play out there. When you talk about that full self-automation driving, that's something that's being underappreciated. And Elon Musk has been so quiet as of late. I think there's something coming. I don't know. I don't have any information, Dom, but it feels like he is going to defend his stake. And the fact that he owns almost 25%, not quite 25%, but the fact that he owns almost 25%, this will allow him to vault his net worth well above $200 billion and reclaim #1 man, richest man in the world.
Now, Jeff, you may not consider Tesla to be an EV play. The problem is a lot of people out there consider Tesla to be an EV play, and they were grotesquely disappointed by the deliveries and production numbers that we saw. They came in below even the most bearish analyst estimate coming out there. How long does it take for this thesis to play out if EVs are not your primary reason for playing Tesla?
I think we have to take a step back and realize the EV growth we've seen in the last 5 years, Dom. It's been 5 steps forward and 1 step back. The global demand. There's been a lot of consumers who are still reluctant to make that leap. But I think as we move forward with technology efficiency, you will see EV growth demand pick up again. But right here, right now, yes, there's a story in China. Yes, there's a story globally that you are seeing a little bit of a pullback in EV demand. But this is more than just a car company selling electric vehicles. This is a technology company. This is an AI company. When you think about Elon Musk and the abilities he has in all of his companies, if he could get a little bit of focus into Tesla, I think you will see this name go back and revisit that $300 level, which is a big, lofty move, but that is the 52-week high up at $299.
All right, so there's the top play. Your #1 draft pick, so to speak, in this whole process, Jeff.
Yes.
Let's take us through now what you think is an under-the-radar bloomer that happens in the second quarter and beyond.
Well, this is an underrated other name, but semiconductors obviously are not under the radar. But Micron is a name. We just rewind pre-earnings. In the middle of March, I actually put on a CNBC Options Pro article talking about the untapped value. You saw this name, just like every tech name in 2022, nearly get cut in half. Had a great 2023, back about 73%, but it is on fire right now. And as long as their biggest customers, because they develop a lot of memory chips, but as long as you see Apple, Microsoft, and some of the big names like IBM continue to push demand for those chips, you're going to see Micron continue to move higher. Here it is at $130. It was just trading at $94, Dom, pre-earnings just 2 weeks ago. So to see this type of parabolic move, I think there's more room to run, but you do have to be considerate how you have exposure to Micron. That's why we love to use options to define our risk, because if we do see a pullback in semiconductors, which will leave the whole market slightly lower, I think you have to be considerate of owning something at a new all-time high.
All right, top play is Tesla. Under the radar is Micron, even after a 50% run. Let's leave viewers and listeners with your thoughts on the broader market overall. Jeff, is this a market that you can feel comfortable owning for the balance of the year, or are we due for more downside?
No, it is, Dom, but I think we have to remember I've been trading for almost 30 years, and when you see markets move in the way they have since November, markets don't continue to move in a straight line. So I think it'd be very healthy to see some back and fill in volume in the S&P 500 to that 4950 level. That's a 5% pullback. I think that'd be healthy. I think it'd be bought tremendously with all the cash on the side. But right now, the market feels almost like a volleyball trying to be held underwater. Every time it seems to come back, it's being bought with all that cash on the side. If you really do put in 3 rate cuts this year, I think that could fuel us 5 or 10% higher before we see any type of pullback. You know, Dom, it's been over 100 days since we've had a 2% pullback in the S&P 500. But when you get everyone so bullish, specifically the bears of 2023 switching to being bullish, I do have a little bit of a pause right now.